Ladies and gentlemen, good day and welcome to Minda Limited Q2 and H1 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sunil Bora, Group CFO of Minda Limited. Thank you, and over to you, Mr. Sunil Bora.
Thank you. Good evening, everyone, and a warm welcome to all the participants. On the earnings call today, I am joined by my colleague, Ankur Modi. Our best wishes to you and your families for a very happy and a prosperous Diwali. Hope you have a great festive season. Moving to the agenda, we have uploaded our financial results and investor presentation for Q2 FY24 on the stock exchanges and our company's website. We hope everybody had an opportunity to go through the same. I would like to begin by giving some insights on the economy, followed by the current scenario in the auto industry and our financial and operational performance for the Q2 and H1 FY24. Post that, we will open the floor for Q&A. Amidst a backdrop of global challenges, the Indian economy continues to be a bright spot. India recorded GDP growth of 7.8% during the April to June period of 23-24, the highest in past 4 quarters, on the back of strong domestic demand and double-digit expansion in the services sector, retaining its position as the world's fastest growing major economy. Looking at the momentum of economic activity, looking at few early indicators, the second quarter GDP number is also expected to surprise on the upside. Growth in overall economy is also translating into robust growth for auto sector. With the transition to clean mobility, changing consumer preference, PLI scheme, and government emphasis on safety and comfort, the sector is experiencing a significant upswing. Overall, the demand across segments remained robust with high volume growth. The industry volumes grew by 14% in Q2 in comparison to Q1 of the current fiscal, even marginally in line in comparison to Q2 of FY23, despite delayed start of the festival season. Growth in the PV segment continues to be driven by compact SUV segment. Production volumes for passenger vehicle has been highest ever for a quarter at 12.8 lakhs in Q2 FY24. OEMs continue to build inventory in anticipation of a strong festive season supported by strong inquiry pipeline. The driving force behind this demand are the new model launches and a growing trend towards premiumization in the market. The two-wheeler segment also witnessed positive shift as the festive season approaches. The production volume grew by 14% quarter-on-quarter basis, while clocking similar volumes as Q2 FY23. With the introduction of new models and attractive promotional offers, demand increased, especially in the rural areas, fostering improved market sentiments. The growth in two-wheeler segment is potentially marking the beginning of turnaround in rural markets as well. On the PV front, the segment continues to outperform, driven by healthy demand across most of the underlying industries and healthy fleet utilization levels. During the second quarter of fiscal year 24, the industry achieved an impressive 9% growth in the production volumes compared to the same period in the previous year. HCVs displayed remarkable growth of 17% YOY, with both passenger and goods carrier segments contributing to this expansion. The sector's robust order book indicates the potential for this positive momentum to continue. The domestic EV industry is continuing sales growth in 2023, while reduction of FAME II subsidies did result in flattish volumes for two-wheeler EVs during the quarter ending September 23. For the second quarter of this fiscal, total EV registrations stood at 3.71 lakh units when compared to 3.72 lakh units in Q1 of this fiscal year. The total registration of electric two-wheelers in the July to September quarter were at 1.81 lakh, lower than 2.18 lakh units in June 23 quarter. Two-wheeler EV domestic penetration now stands at 3.3%. The decrease in subsidies has led to EV manufacturers increasing prices by up to 30,000 rupees, effectively translating to higher ticket prices as well as longer loan tenures at a higher interest cost. Despite various challenges, we believe that long-term growth prospect for electric two-wheelers remains optimistic as a greater model mix will drive competitiveness. The cost engineering efforts and the introduction of lower cost models may ensure that adoption rates eventually improve. We continue to extend our offering towards both ICE variants as well as the EV variants. We at Uno Minda find ourselves well placed to ride this shift, providing premium offering across both variants. That being said, our ICE segment continues to exhibit strong growth, supported by numerous new launches in our pipeline. The near to medium-term outlook for the Indian auto industry is very promising, with ongoing festival season bringing with it a promise of renewed customer interest and potential demand surge. On long-term outlook also, the automotive industry is experiencing a significant upswing driven by several key factors, including improved customer sentiment and increased spending. In this favorable landscape, we find ourselves in a strong position to leverage these trends through our strategic investments in research and development, aimed at propelling new product development and enhancing our existing product portfolio. Our diversified product portfolio, combined with the rising content per vehicle and the ability to cross-sell our existing customer base, instill confidence in our optimistic revenue growth outlook. Our unwavering commitment to customer satisfaction and our agility in adapting to changing market dynamics remain the driving forces behind our ability to consistently outperform, I would say, within the industry. Moving on to the financial and operational performance for Q2 FY24. You can refer to the key operational highlights on slide number 5. We are happy to inform you that Uno Minda has achieved highest ever quarterly production in four-wheeler as well as two-wheeler alloy wheel on account of commissioning of capacity expansion and robust OEM demands. We have also commissioned both our EV component and systems plant, while new EV system plant at Faruknagar, Haryana under the JV with Frevo was commissioned in Q1. Supplies from this plant had already started and is expected to further ramp up in coming quarters with start of production of more orders received. In August 23, we commissioned a second EV systems plant under the subsidiary JV with Buller Motors. The plant will manufacture traction motors, BLDC motors for EV two-wheeler and three-wheeler. The JV had already received orders from OEMs and is expected to start supplies by Q4 FY24. During the quarter, the board has also approved increasing its stake in Minda Westport Technologies Limited from 50% to 76% by acquiring additional 26% stake from the JV partner Westport Fuel Systems Italia. The purchase consideration for 26% stake is approx 15 crores. Uno Minda and Westport are also amending its JV agreement to include future hydrogen components in addition to CNG and LNG, LPG components and kits in JV territory of South Asia, comprising of India, Bhutan, Sri Lanka and Nepal. By integrating Uno Minda manufacturing and integrated engineering expertise with Westport's technologies and products, this partnership will cement Uno Minda as market leader in alternate fuel systems to tap the ever-growing Indian automotive market. Technology and innovation are two pillars which lays the strong foundation for Uno Minda. Over the years, we have filed more than 390 patents and have registered 344 design registrations. Last year, we were chosen as top 50 innovative company by CII not only in auto component sector but across all sectors. To add to this achievement, Uno Minda has recently been awarded National Intellectual Property Award 2023 in the Design Registration category. The National IP Award is organized by Office of Controller General of Patents, Designs and Trademark, DPIIT, Ministry of Commerce and Industry, India. The award is conferred to recognize and reward the top achievers of the industry for their IP creations and commercialization, which have contributed towards strengthening IP ecosystem in the country and in encouraging creativity and innovation. Considering the growth potential of four-wheel alloy wheel business, the board has approved setting up of new greenfield plant with a capacity of 120,000 wheels per month. I will discuss this further in subsequent slides. We would also like to inform you that we have now completed acquisition of our land bank of 86 acres at Pune Trade City. We are also in discussion for acquiring 3 more land parcels in north, west and south for our future expansion. As was guided earlier, the revised strategy will serve dual purpose. First, it will expedite future expansions as it will eliminate any delay on account of land acquisitions. Secondly, we can build bigger plants as well as consolidate our existing plants wherever possible into one location to be able to better manage our operations and achieve economies of scale. Coming to financial and operational performance, you may refer to slide number 7 and 8. At consolidated level, revenue from operations for the quarter ending September 23 increased by 26% year-on-year to 3,621 crores from 2,877 crores in Q2 FY23. As we continue to expand our capacities and capabilities along with gaining market share and increasing value. The auto industry production volume for the quarter has largely remained flat on YOY basis, while our revenues grew by 26%. The company has continued to demonstrate significant outperformance in the current quarter as well. We have witnessed growth amongst all our products led by EV products, lighting, switch, and PV alloy wheel business. Even on quarter-on-quarter basis, the consolidated revenue has grown by 17%. EBITDA for the quarter was at 402 crores, improving by 26% from rupees 318 crores on YOY basis. The EBITDA margin for the current quarter stood at 11.09%, in spite of having recently commissioned multiple plants which are in ramp-up phase, wherein they are yet to reach optimum production levels to fully absorb the fixed and semi-variable costs. Finance costs have increased to 27 crore in comparison to corresponding quarter last year on account of incremental borrowing for CapEx. Borrowing costs have also gone up following series of hikes by RBI, which is being passed on by the banks in a staggered manner. We believe the interest rate costs are near peak levels and hence we have ensured large part of our borrowing on floating rate, wherein we will be able to quickly capture benefit in case of any improvement in the interest rate. The profit after tax, which is Uno Minda's share for the quarter, was at 225 crores as against 170 crores in Q2 FY23, registering a growth of 22%. I would like to highlight that we have once again crossed the highest ever quarterly revenues and profits. We have crossed net attributable profit of more than 200 crores for the first time ever. We have been creating new milestones every quarter with our revenues and profitability. On a first half year basis for FY24, we have achieved consolidated revenues of 6,714 crores for the half year ending September 23, registering a growth of 24% on a year-on-year basis. The EBITDA for the period grew by 25% at 732 crores, and the profit after tax, which is Uno Minda's share for the half year, was at 398 crores as against 309 crores, registering a growth of 29%. Coming to the business segment-wise performance, starting with switches, you may refer to slide number 12. The segment achieved revenues of 933 crores for the quarter, contributing 26% of our consolidated revenues. The growth in switches business can be attributed mainly to growth in four-wheeler switch business on account of better industry volumes and increasing share of business with our core customers. And the export in two-wheeler switch has also done well. At Auto Expo 2023, we had demonstrated our capabilities for advanced technology switching and capacitive touch-based switch. We are extremely happy to inform that we have now also received first orders for capacitive touch-based switch from an Indian four-wheeler OEM. Our expansion of four-wheeler switch plants at Chennai is commissioned in October 2023. The greenfield project at Faruknagar is going as per plan. The commissioning of Chennai plant is expected to boost revenues in subsequent quarters. Moving to lighting business, it has achieved revenues of 834 crores for Q2, contributing to around 23% of our consolidated revenues. The technology advancements in both head and tail lamps has completely changed the automotive lighting industry. Minda has been forefront in leading this technological and humanization wave in automotive lighting. In fact, some of Minda's products like cornering banding lamps for two-wheelers and connected tail lamps for four-wheelers has been highlighted as key differentiated factors by the OEMs during the launch of the new models. Increasingly, the passenger car is being considered as the third living space. This is leading to significant changes in the interiors of the car as well. Following last quarter, we have won order for ambient lighting during the current quarter from an Indian OEM for its EV model. We would like to inform you that expansion of lighting facilities in MIVCL, Vietnam has been completed. Consequently, we expect better revenues in coming quarters. Further, with respect to new four-wheel lighting plant at Cave City, Pune, land acquisition was completed and ordering of key machines have been done. The expansion is on track to be commissioned in phased manner starting from Q2 FY25. Moving to our casting business, it has achieved revenues of 753 crores for Q2, contributing to 21% of our consolidated revenues. The growth in casting business revenues is led by four-wheel alloy wheel business with ramp-up of 30K line in Gujarat for our four-wheel alloy wheels. The customer mix has also contributed to the growth where some of our OEMs customer volumes were better than industry growth. The two-wheel alloy wheel business has also grown with commissioning of two lines aggregating to additional 1.4 million capacity out of 2 million plant. The first line started in July 23, while second line started in August. The third line is expected to start commissioning in coming quarter. The customer and product diversification strategy is also playing out well with increase in alloy wheel supply for scooters and increase in sales to new customers. Moving to acoustics, slide 13, our acoustic business had achieved revenues of 210 crores for Q2, contributing 6% of our consolidated revenues. Both India business and European subsidiary Clarton on reported stable growth. The volumes at Clarton remain lower due to lower industry volumes. Moving to our seating business, which achieved revenues of 289 crores for Q2, contributed 8% of our consolidated revenues. As was guided in previous earnings calls, we have started supplies to new customer, which is one of the new age two-wheeler EV OEM. The export of seats has also been steadily increasing. We had also informed about the order win from a new two-wheeler customer, which is an established OEM. We are expecting to start supplies to them in Q3 FY24. Seating business is poised for a healthy growth going forward with SOP of at least 3 new two-wheeler EV OEMs in next 3 to 6 months. These are in line with our customer diversification strategy advised at the time of seating business acquisition. Moving to other product businesses, which have achieved revenues of 601 crores for Q2, contributed 16% of overall top line. The growth in other product business is mainly on account of EV product, controllers and sensors, blow and injection molding business. Our controller business has been growing tremendously in the last few years and have a great future potential. The wireless charger has become one of the key products of the controller business. We have received incremental orders for wireless chargers from four-wheeler OEMs. Revenues from EV two-wheeler OEMs increased to 143 crore in Q2 as against 136 crore in last quarter, in spite of 17% decline in volumes. Two-wheeler EV penetration has also come down to 3.3% in comparison to 4.5% in the previous quarter. The revenues from EV two-wheeler OEMs is expected to continue to increase with SOP of new models. Our new EV components plant at Faruknagar has started with few assembly lines in Q1 and is gradually increasing number of lines based on SOP of more orders. During the quarter, we have received new orders having annual peak revenue of around 475 crores from EV OEMs, out of which 350 crores pertains to EV-specific products comprising of off-board chargers and DC-DC converters. Total annual peak revenue from these orders now stand at around 3,000 crores. The share profit of loss of associate JV for Q2 stood at 53 crores as against 29 crore in Q2 FY23. While major contribution came from Denso, Roki, TG, Westport, Minda Onkyo has also turned around in the last few quarters, resulting in healthy growth of profits from JV. We had actually received some price actualizations during the quarter in one of the JV, which includes amount relating to previous quarters. Moving to the aftermarket and international revenue, we can refer to slide number 14. In terms of our revenue pie for the quarter ending September 30, OEM business accounted for 93% and aftermarket at around 7%. Our aftermarket division revenues were up at 259 crore as against 249 crore in the corresponding quarter last year. While aftermarket business has been growing in absolute terms, OEM businesses has been growing at a faster pace. Our international sales contributed around 13% of the revenues. Again, while international sales has been growing, the domestic business has been growing at a much faster pace. Moving to our debt levels, our net debt as of September stood at roughly 1190 crores as compared to around 1100 crores as on March 31, 23. The company had incurred capex of 542 crores, including capex on land bank of around 110 crores during H1 FY24. While sustaining and growth capex has been financed from business cash flows, the expenditure on land bank has resulted in incremental debt of around 100 crores. Our net debt to equity at 30 September stood at healthy 0.25. We have achieved ROCE of 19.3% based on analyzing profits of H1 FY24. Kindly note that capital employed is considered for calculation, and it does include the capex for land bank as well, which is currently not generating any returns. ROCE would have been even higher if we were to exclude these non-deployed assets. Moving to the strategic business update, we would like to inform you that the merger of Minda TG with TG Minda has been approved by NCLT in October. The subsequent formality of filing the order with ROC will be completed in the next few weeks. The merger of Minda Iconic with Minda is also in final stages with order approval. The scheme is expected to be pronounced on next hearing on 25th of November. With respect to merger of COSI entities with Minda, we have now received NOC from stock exchanges and are proceeding with filing of scheme with NCLT in the coming weeks. Moving to the four-wheeler alloy wheel expansion, as we have been guiding, we see immense potential in four-wheeler alloy wheel business in view of increasing penetration of alloy wheel in the passenger car. We expect the penetration level to increase by 2 to 3x in next 6 to 7 years. We have been increasing our capacities in our current two plants at Bawar and Gujarat to meet this growing demand. However, our current capacities are now fully booked, requiring for additional capacities. In view of the above, the board has approved setting up of a greenfield plant with capacity of 1.2 lakh wheels per month in a phased manner. The location is expected to finalize in next 3 to 4 months. We have also received LOI from customers for supplies from this new plant. We are in discussion with the government for allocation of large plot of land of around 100 acres, in which will be partly used for proposed expansion of this four-wheeler alloy wheel, and remaining will be reserved for future expansions and projects for the group. The plant will be set up in 3 phases comprising of first phase of 60K wheels per month and 30K wheels per month in second and third phase each. The total cost of the project is expected to be around 542 crores to be incurred over the next 5 years. This is the phased expansion. Moving to the rest of next year, the outlook looks very promising with supporting industry volume guidance, commissioning and ramp-up of multiple expansions, mainly EV plants, two-wheeler alloy wheel expansion, four-wheeler switch plant in Farrukhnagar and Chennai, etc. With our existing diversified product portfolio and new product and technologies, we are confident of sustained outperformance. With this, I would like now to open up floor for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Siddhartha Bera from Nomura. Please go ahead, sir.
Hi, sir. Thanks for the opportunity and congrats on a good set of numbers. Sir, first question I'll take on the new order of capacitive switch which you have indicated. Possible to highlight how much will be the content compared to say a normal switch, and how to look at the value and maybe the profitability for these type of switches?
So, Siddharth, thank you very much. In terms of profitability, we are expecting it to be in line with the existing products, but as this is being made for the first time, we have to maybe wait till the actualization, because the product will go into development, etc., and then you know that there is a development cycle. So while as of now at an initial quote level, we do expect it to be in line, but we will see closer to the development cycle, we'll have a close watch. But overall expectation is that we should be able to maintain our margins, and despite the value which is kit value is expected to be higher than the existing switches.
Okay. And second, sir, on the alloy wheel side, you have talked about big increase in the penetration levels over the 6 to 7 years. So first is, what is the penetration level currently, and how much can it go up to when you say that see the potential? And second is, if you look at the capacity expansion, I mean, it seems much smaller than the potential which you are sort of expecting. So, how will it? I mean, how are you thinking about that?
Yeah, that's a very good question, Siddharth. In fact, I'll address both the questions. So first is your current application factor of alloy wheels is roughly around in the range of 42 to 44%, and it has been growing steadily over past few years. We have been discussing, I think last year we were discussing around mid 30%, 30 to 33, 34%. Now it has increased by almost 10 basis points. And globally, we know that the application of alloy wheels is almost like 95%. In fact, many a times you have to struggle to find a car with a steel wheel. It normally is that in the big, we can say, not trucks, but the car trucks, what we see normally. So the very heavy-duty vehicles normally have the steel wheel. Otherwise, mostly you have alloy wheels. So we do expect this trend to sort of catch up in India, and everybody today now wants car with alloy wheels. And the reason being that if you see that the kind of alloy wheels which are being sold in aftermarket and even the SPDs through the OEMs have been increasing gradually, which means that consumers don't want to pay price for the top model which comes with alloy wheels. Maybe they want a base model itself with alloy wheels, and that's what a lot of OEMs have now also started working in that expectation. So we do expect this to reach, if not to 95%, at least to I would say 70-80% of application factor in next 7 to 8 years, as you have just raised. In terms of capacity, yes, I appreciate that this capacity of 120K will definitely not be enough, and you know that almost every year we have been expanding this. We will soon come out with, we are working on this, but we don't want to basically have all the capacity at one place. So while at this new location, what currently we are discussing, we will have the land purchased for incremental capacity beyond 120K. I would say beyond 120K, another 120K sort of flexibility we will try and retain. And we are actually working on some other location as well, which will come in due course. So to your point, yes, this capacity looks smaller versus the penetration level which are expected over the next few years, but we are also trying to time our investments in such a way that we don't invest entire CapEx upfront and have the assets which are lying idle for utilization.
Okay. So this CapEx of 540 crore, this includes the land cost as well, is it? Because the CapEx amount looks higher compared to the last 60K which we had done for 190 crores.
Yeah. So the way you have to see, Siddharth, is first is it is not linear when we compare with last 60K, because what happens, the last 60K what we have announced, there are some capacities available for painting and machining. So when we say 60K, it is not the entire plant on its own. It has some facilities which are being used or optimized from the existing. So like the paint shop and machining, as I said, was to be used from the existing, and you put just 2 additional lines of casting, etc. So that is one factor. Number 2, when you do a total new plant, you have to start from scratch, right? So you have nothing, you have no common utilities, no paint shop, no leverage of existing facilities. So greenfield plant versus a brownfield will always have a delta. Number 2, the costs have definitely gone up over last few years. In fact, the land itself is very, very expensive, and the construction costs, have been going up. So yes, the costs have been higher. So our endeavor is still that the kind of ROCE which we have been talking has been our basis for approving the CapEx, and board has looked into that, and then it has been approved. So yes, the CapEx is a little bit higher, but it is not apple to apple compared to 160 and 120. So when we do another beyond 120, when we do CapEx, it will not be proportionate.
Got it, sir. So lastly, if you can share the alloy wheel revenue for the two-wheeler and four-wheeler.
So alloy wheel revenue for four-wheeler for the quarter has been roughly around 370 crores. Do you have two-wheeler?
Yeah, two-wheeler is 175. And for four-wheeler, 370 for MK. And KMA also there was another 60 crores.
Yeah, KMA also we start consolidating. Yeah, sorry, my bad.
Thanks.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Raghunandan NL from Nuvama Institutional Equities. Please go ahead.
Congratulations, sir, on stellar numbers, and festive greetings to you.
Thank you.
Thank you, sir. Sir, firstly, on the CapEx side, for first half, the CapEx has been over 500 crore. How do you see the number for the full year? And on the debt raising of 400 crore, when do you expect that to be completed?
Yeah. So, Raghu, CapEx of 542 crore, as I mentioned, includes payment for land of around 110 crores. So if we exclude that, the CapEx excluding land bank is something around 430 crores. And as we guided at the beginning of the year, the CapEx of around 700 to 800 crores. We are still looking at that kind of range. Only now delta will be this new project which has been approved for alloy wheel. That CapEx, whatever gets spent in this next few months, will get added. That's number 1. And number 2, this debt of 400 crore, as of now, we are sort of expecting this land what we spoke of around 100 acres, which we are discussing with the government. We are wanting to sort of align this with the payment linked to the acquisition of the land. So otherwise, for our operational and other CapEx, there is no fund requirement. This is only for that strategic investment, and we will time it accordingly. But directionally, we are expecting within this quarter.
Got it, sir. Sir, in the others, in revenue, in the other segment, there is a very strong 70% growth YOY or 250 crore of delta. Within this, how much would be the sensors controller revenue be? Would it be over 250 crore? Would we be on track to achieve full year number of 800 crores?
Yeah, I think the controller and sensor revenue was roughly around 230 crore for the quarter.
Got it, sir. So we should easily achieve that full year number of 800, possibly higher than that.
Yeah.
And on the EV side, sir,
Sorry, on?
Electric vehicle EV side. So this year, at the current run rate, we should easily cross or go closer to 600 crores for the full year. So would you look at EV revenue going over 1,000 crores by FY26?
Ideally next year.
Ideally next year. That's wonderful to hear. And on the lighting side, we had a very strong growth of 27%. So any new projects here or notable increase in the LED share? Just trying to understand what has led to this strong growth.
Yeah, so lighting, if you remember, Raghu, we had, I think, a few months back commissioned our new plant at Gujarat, and that was also linked to the new model launch by one of the OEMs. So that volumes have kicked in fully in this quarter. Plus, there was one more product SOP. So it is primarily these two things have driven the growth in the four-wheel lighting business.
Got it, sir. And this also aligns with the increasing content which you indicated for tail lamps.
Absolutely.
With that.
Because the new product which you have launched are all LED. There the kit value has been significantly higher than the traditional ones.
And the tail lamp kit for these new projects will be higher than that of headlamps?
Yeah, actually, in one of the business which is yet to go into SOP, fortunately, I think there has been a lot of complexities and technological advancements which are happening in tail lamp. And one of the business which we have secured, the tail lamp value is actually higher than a headlamp because the tail lamp is entire end-to-end, almost like 4.5 feet, with a lot of the welcome gestures, color change, etc., etc. So the tail lamp lighting has been actually getting more and more complex, in fact, versus headlamp.
That's good to hear, sir. And on the lighting side, would it be fair to assume that we continue to gain market share given all the new orders?
Yeah, so we have been gaining market share, no doubt about it. But in terms of actual percentage, how much is a year-on-year gain, maybe, so that's an annual exercise, so we might be able to tell you at the end of the year.
Got it, sir. And on the margin side, given the strong growth, plant additions, new product additions, so some costs are getting added, and margins, compared to last year, are broadly similar. How do you see the triggers ahead on the margin?
No, margins have been broadly in line with what we have been saying. In fact, we said at the beginning of the year itself, before that we expect margins in and around 11%, plus minus maybe half a percentage point range. So we continue to be within that range, and this is all as expected. There is no surprise. So based on this, and there have been some new business what we have secured at a very, very competitive pricing. So while that has ensured that we continue to grow very, very strongly on the top line, it does have some impact on margins, but it's a calculated decision which we have taken because at same margins on an average, if we are able to maintain, we obviously would go for a calculated growth. Not that we are taking business at a loss, but even if business are at less margins, we have been sort of accepting that, and that is what the reason of we guiding of that 9% on an average going for the full year.
Thank you so much, sir. I'll come back in the queue. All the best.
Thanks, Ravi.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Nikhil Kale from Invesco. Please go ahead.
Yeah, thanks for taking the question, sir. Congrats on a very good set of numbers. So my question was on the alloy wheel side. The new CapEx that you have announced, so again, is it being driven almost entirely by Maruti or are you also seeing kind of new inquiries or kind of alloys coming in from some of the newer customers or new other OEMs which you did not have today?
Yeah, so I won't say Nikhil newer customer, but definitely other OEMs as well. So in South, in KMA, you know that we have been servicing the customers like Toyota, Honda, Renault, Nissan. And there also we have been getting good business traction, and we have been working to debottleneck capacity there. Hopefully, we will come back to you to the board maybe in next couple of quarters. In North, you know that we have been servicing only two major customers, which is as one you took, another is Minda. So these two major customers we are servicing from our North plants. And sorry, I missed. We are also servicing the Korean customers from the West plant.
Correct. I was coming to that only. So again, there you have some LPDC capacity, but now again we are talking more about on the GDC side. So what has been, I mean, any progress on maybe getting more share of business or more orders, because LPDC we don't seem to be increasing capacity.
So Nikhil, business is there to be taken, but at what prices is always the question, because once you go for a fresh investment, you have to also see whether the business is remunerative enough to justify the fresh capex. I think that's where the dilemma has always been, and we have been, very, very calculative in terms of any new investment, and we don't want to make a new investment commitment with significantly lower margins. So I think we have been discussing with the customers. They are very, very positive. The business is there to be taken, but it is the price which is currently being discussed.
Okay. And just secondly on the margin, so a couple of entities that caught my eye. One is on COSA and Minda. So obviously that is something that you have kind of recently got in full control. What is the target over there? I mean, over the next maybe couple of years, where do you see the margin stabilizing at COSA and Minda? And secondly, Minda Q2 last year we've seen significant margin contraction. So have we seen kind of an improvement coming up in the first half? So again there, and do we see margins kind of come back?
Yeah. So KMA, I think I'm happy to communicate, Nikhil, that in the last quarter we were in loss in terms of EBITDA. This quarter we have actually turned into green. Not at the bottom line basis, but at least EBITDA is positive, and in Q1 it was negative. So our first goal is to be PBT positive, which will take some time, because you know that the plan which you have taken was into losses, deep losses. In fact, it has huge carry forward losses of more than 100 crores, and it's a tough task, because it's all second-hand plant which was put up by our JV partner, and it needs a lot of upgradation, etc. And that takes time, because we need to do upgradation in a running plant. It's a little bit complex and time-taking exercise, but the good thing is directionally it is moving in a positive direction. And as I said, our first goal is to be PBT positive and gradually take it closer to our group profitability. It definitely will remain a little lower in terms of margin, even if we do everything, versus our North plant, because as I said, it's a very old plant, and it has its inherent disadvantages, and the cost structure in South is a little more than the cost structure in North. So all those factors do play a part, but we are working on it, and hopefully this will be in black soon. Another, you have asked for Minda Koraku. So Minda Koraku also has been doing stable operation over past few months. The Bangalore expansion, which was started sometime last year, has been now at a stable level, and so is Gujarat. But in terms of profitability, I think the team has been working on very, very rigorously, very aggressively. But still, this quarter also has been in loss, and we are expecting significant improvement in the coming quarters. And Q4 we are expecting to be significantly in green. So directionally, the things are improving there. But if you see for last 2 quarters, it is in red.
Got it. And just to follow up there, so there I think the gross margins have come down. So was it just because of, say, RM inflation, or was it more related to the ramp-up of these plants?
Now it is primarily related to the margins, gross margins, because the new business and etc. what we have taken, somewhere the actualization cost has been more than what we have anticipated. So, and that's what we have been trying to talk to our customers, if possible, to get some price increases. In addition, we are also doing cost optimization and cost reduction exercises at the business level, which have also yielded some results. But yes, this is a journey which will take maybe another couple of quarters, and hopefully we should be in black soon.
Got it. Thank you. That was really helpful, and I wish you a very happy day.
Thank you. Thank you, Nikhil. Nice to hear it to you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, sir. Good evening, and thank you for the opportunity. My first question is regarding this controllers product.
Sorry to interrupt you.
Mukesh, your voice is not clear actually.
Is it better now?
Yeah, little better. I don't know if you're using a hand-free.
Just a second, sir.
Is it better now?
Much better.
Yeah, sorry about that. So, first question is on the controllers business. Obviously, that's right now part of the standalone entity. While I do remember that there was some commentary that once the EV plant starts at the JV level, there will be some, either there will be a related party transaction between the standalone and the JV, or there will be a move of some of these products into the JV. So could you just remind us of how that's going to work, sir?
Yeah, so as of now, all the new business which we are getting, it stays in controller. We have not yet moved to the JV, and we are not expecting any significant shift or significant business to move from controller to JV at this point in time. If it will be very, very nominal.
Okay, so the motor controllers revenue that we, or the orders that we have, that will be made separately at the JV level.
The motor controller is anyway part of the JV.
Right, right. But these controllers, you will not be moving it. The existing controller business will remain in the standalone business.
Yes, yes, yes.
Okay, okay. Fine, thanks for that. And second is, when I look at the number of new plants that are going to start for you, I mean, there's a lot of SOPs that are coming up second half this year, as well as first half F25. So do you envisage some kind of a margin hit for us, given that there will be some fixed costs that might start hitting us, while obviously these plants can take some time to ramp up? Because it seems like a lot of it is getting bunched up in the next, say, 6 months or.
No, you are right, Mukesh, and that has been one of the reasons why that despite a significant growth in top line, we are not able to see significant growth in EBITDA. In fact, it looks like all the costs are fixed. So while there has been increase in the RMC and has impacted our gross margins, another reason, as you rightly mentioned, is with all these new plants where the fixed costs are not absorbed, or they are maybe marginally into red, like the JV with Tachi S or Buller or some other products. So they are actually margin diluted. So to your point, yes, there will be this near-term thing for maybe 2-3 quarters. But as I said, the margin on an average of around the guidance what we are giving of 11 plus minus some delta bakes into that kind of cost. Okay,
that already bakes into that. Okay, got it.
Yeah.
Got it. And just lastly, if you could provide some timelines of this this 86-acre plot that we have now kind of looked at for in Pune. So I do remember that you had mentioned that there is some kind of a consolidation that you're looking at. Now that you're also looking at more land parcels across other regions in India. So, I mean, what could be the broad timelines on when we can start expecting some consolidation of your plants in some of these large locations?
Yeah. So, Mukesh, the idea is that we don't want to sort of rock the boat unless it is required. So when I say that, I think, if say, for example, I have a running plant in that region, we have around 12-13 plants in Pune. So as long as the incremental growth is met by the existing plants, we don't want to spend more in building new plants, unnecessarily get into the more capex and consolidate for the sake of it. Whenever they need more capacity, like for this lighting 4-wheel plant in Pune, the team actually came up with another plant in Pune, and that's when we said no, we can't allow 2 plants in the same region. We build a bigger plant and move the existing plant also there. So what we are doing is, on one hand, we are creating a land bank, and on the other hand, we are keeping that flexibility so So that whenever there is a new business, normally customer also asks, do you have a capacity before awarding a new business? So we can always go and say, now we have a land bank. If we get more business which needs more capacity, we'll put a bigger plant and move the existing also there. So the point is, we have got a bigger land bank. We have negotiated some better incentives from the state government, but the capex of constructing new plants, we will time it based on when the business need is, not just start consolidation and spending money.
Okay. Got that, sir. Got that. So thank you for this, sir. I'll get back in the queue.
Thanks, Mukesh.
Thank you.
Thank you. The next question is from the line of Raghunandan NL from Nuvama Institutional Equities. Go ahead.
Opportunity again. Sir, firstly on the associate profit, you indicated that there was some amount relating to the previous quarters. Was it a material number? Can you share that number?
Yeah, it's not material on overall scheme of things, but if you see 53 crores, it is material. So it does include almost like 7-8 crores which relates to the previous period.
Got it, sir. And secondly, EV specific capex under Bueller, Minda EV systems, how would be the gross effect turnover here? Currently at the company level, you have 2.5 times.
FATR you are asking. It's too early to look at FATR that too, and the plant is yet to have SOP. The motor, as I said, SOP will only be in January, and the EV has just started in last quarter. So I think let us give some time, and I would request we look at FATR only from FY25 or FY26 perspective, because until then you will have all the capex done and you will not realize the full potential.
Got it, sir. And just lastly on the PLI scheme incentives, just wanted to understand any timeline you see for getting those benefits. That could also add to the margin.
Nothing we are expecting in current financial year, Ravi.
Got it, sir. That's all, sir, from my side. Very helpful, and thank you very much.
Thank you. Thanks.
Thank you. The next question is from the line of Sabyasachi Mukherjee from Bajaj Financial AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question is, you have grown revenue for the first half around 24% YOY. What's your outlook on H2? Are we looking at a similar growth, or will there be some slowdown?
So, Sabyasachi, we normally never comment on the top line because our destiny is linked to the OE volumes. Our endeavor always has been whatever is the industry growth, how do we outperform the industry growth? And as you would have seen, that even on the first half year basis, the full year numbers of industry volumes are flat. Yes, there is some improvement in PV, but not so improvement in two-wheeler, etc., etc. So on an overall basis, that is flat, but our revenues are better by almost 25% for the first half. So our long-term guidance has been whatever industry grows. If industry grows by 10%, we grow by 15%, or if industry grows by 8%, we grow by at least 12%. So 1.5 times is the floor which we have kept a target for our growth versus the industry growth. So if coming to second half, if the momentum remains what it is, we do expect the similar numbers for the rest of the year. But yes, as I said, the entire question is the industry volume. So if industry volumes remain robust, we do expect the same trend to continue.
So, where I'm coming from is, given your conversation...
Mr. Sabyasachi, I'm sorry to interrupt you, sir. So your voice is very faint. Could you speak a little louder, please?
Yeah, hi. Am I audible?
Yeah, it's a little better. Go ahead, sir.
So, sir, I was asking that, given the conversations you are having with the OEMs, probably, we understand that there could be some bit of channel filling done in the quarter two, just ahead of the festive, and there could be a production, bit lower in the Q3. what's your conversation, based on your conversations, how does the Q3 and probably the Q4 look like? Just in sense, I was trying to understand.
So normally, we do get indents which are on a rolling 2-month basis, but the indents many times get firmed up only at the end of the month for next month, and within the month also there are some changes. So while the rolling 2 to 3 month numbers look attractive, looks better than what they were last year, the sheer reason is that this time the festive season is delayed by almost like 3 weeks. So there will be some inventory buildup which continues to happen in October as well, because we are now in the festive season, and this is the week where the maximum delivery of the vehicle happens. Yes, the numbers will take some time to come out, but on current rolling 3 month basis, we do expect it to be better than what they were last year.
Got it, sir. Next, second question is, in terms of margins, I understand that, few of the new plants are getting commissioned, and also you are getting new EV orders at competitive prices that you have called out. But as we progress, do you see some improvement coming in probably, 3, 4, 5 quarters down the line when things get, settle down and probably you have a better handle on the costs? Do you see some improvement coming in the margins?
Well, definitely, we have been consistently working on to improve our margin profile, but as I said, we are in a competitive world, and there have been some business which we are taking at a very, very, I would say, increased competitive prices. So that does have some impact on the margins. But yes, from medium to long term, we continue to work on improving our margin profile. But how much, it's difficult to communicate at today. But maybe I will be better placed to answer your question for next year, maybe when we discuss for the Q4 number.
Got it, sir. That's very helpful. Thank you. That's all from my side.
Thank you.
Thank you. The next question is from the line of Siddhartha Bera from Nomura. Please go ahead.
Sir, thanks for the follow-up. So just wondered the clarification on this others business. We have seen like about a 150 crore QOQ jump, and you said 230 crore from sensors and controllers. We already did 200 last quarter. So how doesn't still add up the increase? Can you just explain what any other thing which has also jumped in the current quarter?
Yes, Siddharth. So Globe Holding business with their new plant has also done well. So there is an increase there. Then I think our Evo plant has started. There are revenues coming from there. Aftermarket business has also grown. So all these other components have grown. So even our PC business Catalyst, their outside sale is also better. So all of this has contributed to this growth.
Okay. Evo contribution will be how much in the current quarter?
This
Take it offline.
Yeah, we'll discuss offline.
Okay, sure. Thanks.
Thanks, I hope you won't mind it.
No, sir. No.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for the closing comments.
I would like to thank everyone for joining on the call. I hope we have been able to respond to all your queries adequately. For any further information, we request you to please do get in touch with us. Stay safe, stay healthy, and thank you once again.
Thank you. On behalf of Minda Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.